last year. Okay. That the miners bottom in 2024. So we'll see what happens here in the next few weeks. I still think gold, a lot of people are talking 1940-ish for gold. And I actually could see a little deeper. 78.6 is 1880. But there are some counts at 1940. Let's see what WTI is doing today. You know, it's trying to base here. I don't know. Maybe we get one rally back towards 80. Still doesn't look good to me. And yields are, giving up a little bit. But actually talked to David Brady yesterday, and he's looking for about 440, which would be halfway back here. So that would probably portend a hot number tomorrow. So we'll see. Any thoughts on the board today? I think we have some news today. What is it? Employment news or?
Yeah, we've got jobless claims, Philly Fed, manufacturing,
Fed.
which will be closely watched after that horrendous empire, and
Right.
some housing starts and permits as well for December. What I would say quickly about that, I've just noticed some of the new year numbers, NAHB and MBA mortgage apps and activity has been quite a good start to the year in those numbers. So that might be something to watch for a bit of more soft landing data from the housing sector coming in the new year.
Yeah, yeah, and I saw. Was that the home builders confidence number was up 7 points or something?
Yeah.
Okay, so they're optimistic. The housing stocks gave a little back on this little pop in rates. Should probably pay attention to what happens in the bond market. Risk off is delayed. Maybe we're going to try that one more new high up here towards 49. We'll see. That's about it. Kman, thoughts today? How are you? Good morning.
Good morning, Dale. Good morning. Philly Fed upcoming. That could push the dollar perhaps if it's coming out stronger than expected. People are watching it on this manufacturing thing after that New York print the other day, which had zero impact. But yeah, that's going to probably be a bit of a driver today. What am I watching? I'm seeing interesting levels in the dollar pairs that are sort of starting to hold. Cable is one, of course, that held, but then also the euro just below 108.5. There's a few things going on, so I'd love to see a test and see what's really going on there. You got the same thing in the low 65s on the Aussie. And you've got the same thing, just 61 and down to 60.80 or so on the Kiwi. And at the end of the year, we were like trying to smack the dollar. Well, year-end flows, and now we are looking at the other side, and it's gonna take pretty decent numbers, I think, to drag it all through. If not, I can see a prolonged period of stupid range trading continuing.
Okay, little pullback in MEX. Is this a break to buy? It was one heck of a move. You buy a pullback
yeah, anywhere. I was looking at it 17, 10, 12-ish, and then 17 flat, of course. Yeah, it's
Okay.
it's always the same thing. We had that Trump lie little scare, emerging market getting out of whatever they wanted to get out of, and now we are coming back because the MEX is still an 11% currency, and it's the other side of the spectrum of the Japanese yen, and it's very hard to be short MEX for long because the funding is going to bite very quickly unless something fundamental changes. So that's still I'd also think that those levels up in the 730s were the target of a small inverted head and shoulder met, and now we're coming back off. Yeah, I
Okay.
trade the ranges, but dare to trade ranges, perhaps, you know, just sometimes it's just there, the ranges to trade.
Okay. There's euro pound still under some
Patient,
pressure.
patient.
Yeah.
Very, gotta be patient there. This I think quite strong hands trying to play ranges still, and but the good thing is, well, for those short euro sterling, of course, or long sterling, the good thing is that we are starting to hold below 86, the big figure. So
Okay.
the range is slightly shifting. Tomorrow we've got UK retail sales. That's likely going to make this break this mini range.
Okay. And any comments on the yuan here? Are you noticing, like Mark Chandler said, that it could be a good funding currency? Are people using the yuan for that?
Perhaps versus the high yielders, you can do it because there's still the expectation that they may lower rates, and they are injecting liquidity, which de facto weighs on a currency at some point. Yeah, you could.
Have they done it yet? They were supposed to
No,
do it. They haven't done
they
it?
haven't done it yet.
Okay.
But it hasn't had a lot of impact on the yuan because at the same time they inject liquidity, which pretty much cancels out. They're holding their hands still, right?
Okay. Had a little reversal in Nikkei last night, so maybe the end has come off while
Mm.
uh, Nikkei comes off, and DAX went right back to previous highs. Real important line here that it held. So
That's a nice bull flag pattern you got there, Dale.
okay. So
Yeah.
Blake's looking at a bull flag here, which could, measure sharply higher. It won't be a flag if we close under this blue line. We'll see. So, what are you thinking today, Blake?
Well, I'm thinking that as Ryan mentioned a little bit earlier, and Kman as well. Today's data is going to be pretty important because you got, weekly unemployment claims. That's one. The continuing claims that the rise in continuing claims over the last couple months have been alarming. Despite the decent claims numbers, and then we have the Philly Fed, and as Ryan pointed out, the Empire State manufacturing data was really weak, and it was overshadowed by the rest of the data last week. But still, it's one of those that's more of a standout that I think we need to be paying attention to, especially if you're on U.S. recession watch, if you will. So if that data comes in, the Empire State manufacturing data today comes in and it's not horrible, I think the market's going to really appreciate that. So, between that, you start looking around. I can take a look at the charts here, but
sure.
You take a look around, and you look at like the dollar. The dollar has worked off, very overbought conditions intraday. And, because it's worked off overbought conditions, actually, I'll just pull up the dollar here since I have it on this chart. Intraday, you had those overbought conditions that were developing as we were rallying. Now that we've pulled back to the breakout point and, we've reset intraday RSIs, it's ready to go. So all we need is the data to support that. And I think the dollar is ready, ready for a continuing rally should we get decent data. And going back to the gold market that you were talking about, yeah, gold is barely holding on here. I mean, it broke its ascending trend line. It's now I would consider, a real risk of pulling back towards like the mid 1900s. You got silver. This is I did blog about this, as you pointed out, if you want to read about it yesterday. This 2250, and you can see today it held. That's key. And we can't forget that we had a false breakout up here. You know, that was early December when
Right.
you know, gold gapped up above the highs, silver, you know, tried to
Peaked in
break out.
Asia.
Yeah, it happened in Asian trade. You know, this is
How many important turns have we seen, Blake, in happen in Asia where you really don't expect it? I can remember a few times now
oh,
that the turns have taken place there
they're
overnight.
freaking ninjas.
Yeah, all right.
Really? I mean, do you remember Sterling hitting all-time
Yeah,
low right
yeah.
there? Was it hey, Ryan Kman, did I say that correctly? Was that an all-time low? Well, all-time. I don't know all-time, but that was an all-time low, right?
And that turned in Asia too?
Oh, that one, yeah.
Yeah.
I think
Okay.
so. I'll have to go back way back.
I'm pretty sure it was. I mean, I have to go look at. I'll go look at ICE data, but I think that the ICE data, but I believe that was an all-time low. That happened in
Yeah, it
Asia
was an
too.
all-time low, just a little bit below 1984 lows.
Yeah, exactly. Yeah, before the
Soros.
Soros lows. Yeah. So
Yeah.
that happened in Asia as well. So you're right, Dale. You know, a lot of the important turns, they happen because, you know, Asia's trying to take advantage of the very low liquidity periods. And anyway, that doesn't make me necessarily a, you know, precious metals bear. I am, as I've pointed out many a times, and I did over a big presentation this weekend that I did with a couple other people, you know, for 8 cap, I am looking for gold to pull back to give us great buying opportunities. But then, you know, you look at other assets. Look at Bitcoin. Bitcoin is threatening. You know, we break below, you know, 41.5, and you're going to see some of the air come out that, you know, has come into Bitcoin over the course of the last couple of months, you know, with the ETF approvals. So, you know, I look at some of these assets, and, you know, what's the big beneficiary when you see things like this fall? It's going to be the dollar. And in crude, crude cannot get out of its own way. And look at this tight consolidation in this triangle. I would have thought that crude would have broken out by now with everything that's happening. How about you, Dale? Don't you feel that way?
Yeah.
Yeah, I
Sure,
mean,
taking time.
yeah, I mean, it's not, and that's scary, because if crude really starts to break down, you know, when every long just throws up their arms and they're like, forget about it, I don't want to be long anymore. Next thing you know, crude's going to be trading back below $66, and then crude's got some serious issues. We start breaking down there, technically. But again, where's the big beneficiary going to be? The big beneficiary is going to be in the dollar, I would think. But for now, you know, the S&P continues to hold up. Check out this trend line that held yesterday. That is at 47.20. And that was also the 618. You know, we've been telling the ForexAnalytix community all week, 47.20, really critical support. It is the 618 retracement, and we turned on a dime. I mean, we hit basically two trend lines, previous triangle trend lines, and, you know, held it. So while you're above here, you know, you got to stay supportive of equities. But anyway, that's kind of what's happening in just around the markets really quick. Kman, you were watching pretty carefully when it came out, and this has been my drawings of the euro. I've been looking for a move back to 109 to sell some more euro. I got filled shorting euro last night at 108.8 or 108.92 or something like that is where I got filled, because that's what I was looking for. But we just had the ECB minutes come out. Anything that you read alarm you about anything on the ECB minutes today?
Move on. Move on. Move
Oh,
on.
move on. Okay,
Nothing.
that's okay. So
Nothing.
in other
Nothing.
words, there
Nothing.
was nothing
It's
here in the
already in
minutes
the.
that
Yeah, I mean,
that
we've heard from
suggests that we
all
should be
ECB members already in between, so forget about it.
okay.
Nothing new.
All right. So nothing there. Ryan, we have UK data tomorrow, and you know, it's the last batch of UK data that the market's looking for, which is retail sales. You continuously tell us that in your neck of the woods, in your 5 kilometer diameter that you travel within, because I don't leave a 3 mile radius where I live either, so I'm assuming you're probably the same. Retail sales is just going bonkers and people are out spending money. But jokes aside, what is your read on tomorrow's retail sales numbers out of the UK?
Yeah, I'd lean towards the positive. You know, I prompted that November was going to be better than expected, and it was. I thought December might be a little bit worse, but from what I'm hearing, it has every chance of staying up. There's still a bit of a risk that it's not as much as last month, but there's every chance it could do well. If it does well this month, expect it to collapse in January. That's probably a given. So yeah, it's just if it is decent data, if it isn't collapsing data, then the pound's going to remain supportive, and that's going to be taken into the next BOE meeting, and for them to reflect on, you know, sticky inflation, economy not doing as bad as everyone expects, could keep them leaning a little bit on the higher for longer side of things.
Now, in the week ahead video, I drew out this black trend line, and I was like, well, if we break through the 78% retracement, we're gonna see the 88% retracement in this trend line, and that's where we're stopping right now. And if that breaks, I mean, it looks like you know, kind of a trap door in the market, right? You start getting below there. I mean, that would just confirm, you know, UK data is strong, and you know, that should outperform the euro. And I know we talked about the euro sterling yesterday, but did any of your thoughts change, and how do you feel about it right now?
A euro sterling? No, I mean, it's got the power. It doesn't look like it wants to blow lower. It looks like it wants to grind lower.
Yeah.
So while that's the case, it's got every chance of going down. The fundamentals point to the fact that the pound should be better over the euro. But then for all the levels here, 85 is the big one. You know, that's the do or die level. And I think, given from how far we are from that now, even with the data tomorrow, you know, that's the sort of level I would look to hold, unless there is a real big signal from the ECB that they're cutting early, and the BOE are not. So if you get a signal like that, then I'd expect that 85 to be in trouble. But until then, I'm going to look at it to add back to my longs that I'm holding.
All right. Well, thank you. You know, Michael just reported in, FYI, YouTube isn't displaying the start of the show on time anymore. That would probably be due to personnel error. So we will work on that. And you know, the best way to be on time for this show is to jump on the Zoom call, because this way you can actually see all the Q&A that's being asked at the same time, Michael, if possible. I know sometimes it's a little difficult for you if you're mobile, but you know, the clarity of the show on Zoom versus YouTube is going to be night and day difference. You're going to see the information a lot clearer, and you're going to be able to see all the questions. So thanks for reporting that in. We got yields that still look a little vulnerable here. Look at the you know, 10-year, and by the way, I got to show you guys this. Despite the move lower that we saw in Boons yesterday, the 10-year slipped. We got to the 200 DMA, and look at how important that support level is. And that's a pretty big one, considering the US data that we've got coming out today. If that data comes in strong, we could see the 10-year start to break down. And that would obviously mean that bonds are breaking down, yields are moving higher. The dollar is going to, you know, continue to strengthen as a result. But that looks pretty good. What do you think about that, Dale? I mean, you know, bonds look vulnerable.
Yeah, I agree. I think there's at least 4 1/4, 4.30 in the 10-year yield. So, and halfway back was a pretty important level once it got under 4.40. That's halfway back. So, you know, those are the levels I'm looking at.
And you know, and if you're looking at the 10-year, I mean, you could say, well, you know, we're in a bear flag pattern, which is entirely possible. Bounces have been very shallow. I agree with that. If Stelios was here, which he's not, he jumps in the chat room from time to time, and he would tell you that the market is aggressively bearish, the bond market, so therefore that we should expect some sort of bounce here. But at the same time, it does look like it's constructive. Like if I look at the 10-year, the 10-year notes just as a chart, and this is going to be the inverse of the yields, it does look like even if we do get some sort of setback, that buyers should eventually take hold, which means that if you're trading the dollar, that would mean that the dollar probably will come under pressure at some point. You get the euro back to 105. I think that's a level you've been looking at, right, Dale? You've been talking about 105 in the euro. I
107.
think, yeah, 107 is where we complete the head and shoulder pattern, or maybe it's a little bit further than that. Actually, now that I'm thinking
So a
about it.
yield for the euro to get there, I think the 10-year will get to that 430, 440 level.
Yeah, like the head and shoulder pattern will point to about 106 should we complete. So
Okay.
there's still some work to do, but the overall the dollar looks bullish. Look at the dollar CAD. Now remember, yesterday we had or is it yesterday? It was a couple of days ago. On Tuesday we had the CPI data that came in way stronger than expected, and the dollar Canadian cannot get out of its own way, or the Canadian dollar can't get out of its own way. This thing looks extremely bullish, the dollar CAD. And what happens if crude oil actually breaks down, which no one's expecting? Nobody. I don't think there's anybody expecting crude oil to break down. I think everybody expects crude to be trading at $80 or $90 in the very near future. But what if it trades down to the mid 60s? Where does that put the dollar Canadian? Where does that put the US dollar Norwegian krona? It puts those currency pairs probably a lot higher, in my opinion. Hey, before that we get ready for the news, I wanted to ask Kman, the Swiss is not pulling back. I'm desperately waiting for the dollar Swiss to pull back, but Jordan's comments seem to have really resonated when he was spoken in Davos. What are your thoughts here?
Well, Jordan was supposed to talk today. The market was a bit reluctant to take Swiss lower ahead of what he had to say, and he absolutely didn't say anything. He spoke a few lines yesterday. It looks to be like a grind. If you would you've got that bottom trend line from the fresh one from the end of last year. You clone it, you put it on top, and or you it's getting right up to that 38.2%, which we tagged yesterday to the pip, and we are again starting to push against it. So to me, unless you get bad US data, it's going to continue to grind higher.
Yeah,
I was hoping for a setback back to 85.5 to load up the truck again, but I don't know. Something has to change for the dollar to make it happen, I guess.
I agree. I've got these damn I got these orders that are just not getting filled, and I'm playing it a little bit with the Euro Swiss, but I really wanted to be along this dollar Swiss, and it's going to be one of those situations like the dollar Canadian, where it just doesn't give you an opportunity to get long, and it doesn't give any shorts opportunity to get out, and then you just end up grinding higher. And I have a feeling that this is going to be a very similar move, especially
slower.
with the false breakdowns
more
that
painful
during the holidays.
Even more painfully slow, I think.
Yeah, maybe. Well, hey, we got just a few minutes before data comes out. I'm gonna actually get us ready for data. I'm gonna pull up ForexAnalytix, grab the data flash. Ryan, what are your thoughts going into this data, real quick? Anything that jumps out at you?
Yeah, just probably that Philly Fed, but there shouldn't be any shocks from the jobless claims. But the Philly Fed, as I say, after that horrific Empire number, if this one is horrific, that might get a few wobbles going.
All right, very good. Kman, what's on your like front burner right now?
Yeah, that's what I said as well. The Philly Fed. You get a weak one. I think cable could shoot through. And if you get a strong one, then probably your dollar Swiss, dollar CAD, Aussie, Kiwi retest those levels as well. For those watching Ichimoku clouds, the daily euro dollar cloud is not far from that support around 108.35.40 either. So we are at relatively interesting levels. Huh?
Yeah, the euro has been, even though I'm bearish and I'm short, it has been more of a grind lower. But what we're seeing is we're seeing a lot of these euro crosses move, and not necessarily euro sterling, but you can see the euro Aussie, euro Canadian, euro Kiwi, a lot of big moves there. And I've been participating in those crosses. I am interested to see if the euro will get its move on, and maybe it comes from the ECB, as we do have Lagarde speaking later today. I think somebody had mentioned it, but I want to
Yeah, she
confirm
speaks
that.
every day in Davos
God,
until
I
tomorrow.
want to go to Davos right now. Right now. That's where I want to go. That's where I want to be. Just kidding. All right. So,
I think
hey,
she's
we are
already
30
much
seconds away from data. Remember, guys, gals, myself, Kman, Ryan, and a lot of the team were in the ForexAnalytix chat rooms all day long. So make sure you join us there. It's only $1 for 10 days to try it out. So make sure you do so. All right. Here comes the data. Let's see it. And let's watch that Philly Fed right here at the bottom. It's going to be a real important one.
Housing starts and permits okay. Nice up
Yeah.
numbers.
Look at the 187. Oh, Philly Fed. Well,
Down 10.6. Not
it
a
was
huge
as expected,
disaster.
though.
Yeah.
As expected. But look at that strong US data. I mean, overall, like the employment data. Holy cow. I mean, the dollar is reciprocating. It's pulling back just a little bit because everybody's like, oh, the Philly Fed. But keep in mind, the Philly Fed is at expectations. It's not like that was beyond expectations. So we are seeing the dollar, rally. Stocks are, coming off just a little bit. I think the stronger employment data always makes the market pause and say, wait a second, is the Fed gonna really cut rates in March? We were looking at the interest rate probabilities last night while we were talking on the trade-off with Chris Weston, and WERP's gone from 50% chance to 60% chance of a hike, following, or the cut following yesterday's data, and the dollar is falling tick for tick. So keep an eye on those expectations. And the person that's going to be here, that probably going to talk about interest rate expectations and what's to come in 2024, is Luke Groman. You guys are in for a real treat. Dale has brought in Luke, and he's always a great guest to have here on the F.A.C.E show. So I want to thank everybody for tuning in. Make sure you catch us on the flip side tomorrow as we wrap up the week with. We do have tomorrow, just to confirm, we have Canadian retail sales. So we'll see you tomorrow for the Canadian retail sales. Dale, have a great interview with Luke. And thanks everybody for tuning in today. Thanks, Kman and Ryan. Appreciate you guys.
Thank you, team.
Cheers, guys. Thank you.
Hello.
Happy New Year, Luke Roman.
Happy New Year, Dale. I'm doing
Great
well.
to
How
see.
about yourself?
Pretty good. Great to see you, Luke.
Likewise.
I keep an eye on your stream and things that you're paying attention to. One thing that stands out is you're saying the Fed better start easing quickly or it guarantees a Trump presidency. Can you explain that? Can you please explain that to us?
Those are strong words, but it's directionally pretty close to what I think my views are evolving to, at least for the moment. Obviously, they're subject to change, but in the aftermath, and take this with a block of salt because I'm not a political guy, but watching him win in the landslide in Iowa is interesting. And I think from a media and popular opinion in America, I continue to think the Beltway, broadly speaking, the coasts, still do not understand the phenomenon that is him. They do not understand the mood still in flyover country USA regarding him, and that is what it is. But as it relates to the macro, I came away from the Iowa landslide in his favor, thinking that probably starts to impact the thinking in Washington and the impacts on markets. What I mean by that is if we get some sort of non-linear decline in stocks and the economy, I think that plays well to Trump.
Yeah,
If they overinflate and we get high rates of inflation in the second, third quarter, I think that plays to Trump. And so they, I think, very much need to keep things Goldilocks, which is going to be harder and harder to do, but there is a path forward to it. But I think it takes some of the I think it cuts off the tails on both the upside and downside. But all else equal, gun to my head, if you're the Biden administration, would you rather have 2% inflation and 3,000 SPX or 3,500 SPX, or 4% core inflation and 6,000 SPX? You'd much rather have the latter. And so that's where I think what we saw with Trump on Tuesday, I guess it was, I think is potentially an important moment.
Okay. There's an expression that Iowa picks corn and South Carolina picks presidents. So, we'll see what happens. But, you're talking about levels, but the levels of S&P and the fact that we're starting to blow off and melt up now actually portends that maybe we get a high in the market in the first quarter, and that we might be heading down in the summer and fall, which I agree, there's probably never been a more important time for what the trend is in equities going into the fall. I think that's really going to be the deciding factor as well. So I know you pay attention towards to WTI, Luke, and it's a very important part of your narrative. And last time we talked, you thought that perhaps when we were much higher, that the Fed was in there selling some WTI contracts, and it still doesn't look great to me. So you said, well, this will buy time. So is this still going to be able to buy time? I have some targets down here around the 62.5 level in crude. We could rally to 79 first, but there's nothing here telling me that we have a bottom in crude.
I agree. I'm short-term bearish on crude, and for a pretty straightforward reason, which is there's an article out on Bloomberg about a week ago that highlighted that the spike in tanker rates had caused U.S. oil exports to become uneconomic in Asia, and that they cited multiple Asian buyers who said, we have switched to Asian, or it's U.S. crude is no longer economic in Asia. At the same time, or literally a couple days before, Saudi cut selling prices to Asia. Saudi also went out and borrowed a bunch of dollars, which some analysts said, oh, look, this is proof they're not de-dollarizing. I look at it as, oh, look, Saudi is using the dollar markets. They're borrowing dollars that, oh, by the way, Yellen desperately needs to finance U.S. deficits, to finance a price cut to undercut shale. And so I did that. I went on the EIA's website. I looked at what U.S. exports to Asia were. U.S. exported about 4.2 million barrels a day of crude in October, which is the latest data on the EIA site. Asia was 42% of U.S. exports. So if 42% of U.S. exports are now uneconomic as a result of tanker rates and being outcompeted by the Saudis, that suggests inventories are going to be maybe a little higher than expected in coming weeks, and I think that's bearish for crude. Now, do I think we're going to get a crash in crude? No, I would be a buyer of it. You were talking about your levels. I would say $60, which I had, I pick out of kind of the air, mainly because for me, below 60, U.S. shale starts to become threatened in terms of its production. And from a political and geopolitical standpoint, I don't think the Biden administration will allow that to happen. As intellectually offensive as that is, we can look back to 2015. We can when oil crashed. We can look back to 2020 when oil crashed.
Right.
Both times, it took 2 to 3 to 4 years for U.S. shale production to regain prior highs after it had begun to be shut down, production begun to be shut down. So the way you stop that is you stop oil from crashing. So I would suspect that we would start to see headlines about the Biden administration buying oil to refill the SPR, were it to get down into the 60s or whatever, to support the oil market. Because again, if you let it go too low, shale starts to come offline. And what that means is you have just ceded the oil market to the Russians and OPEC Plus for the next 2 to 4 years.
Okay, because I saw a guy, John Kilduff, is a oil analyst, and he was saying, and you just brought up the Saudi cut, that they're losing patience and that they may do what they did in 2020 to knock out the shale production here in the U.S. And they're also kind of frustrated with member countries in OPEC. So that he thought that was a possibility. Maybe that's what takes us to 60 rather than 40. Also, Luke, you said one of the worst investments, and then I'm going to get to, what you've been so right about is bonds, especially if you're involved in a war. So we had a pretty nice bond rally here, Luke, from here to here. But I mean, compared to the decline, it's still nothing. Do you think that this is all it has, or could we get a pullback and then another wave of bond buying in sometime in 2024? Or do you think we completely abort? It was just a bear market rally and we're going to new lows and new highs in yields, which some people believe. This would really be the biggest surprise, I think, to most market participants would be that the 10-year attacks the 5% level and takes it out sometime this year. Which camp are you in?
I think 5 years our cap, basically, or excuse me,
Okay.
5% is our cap. I don't think it will revisit that for I think still non-consensus reason, which is I think some version of incremental US dollar liquidity will be forthcoming.
Okay.
And so I think the 10-year treasury is still a terrible investment on a real basis. You might make money, maybe the yield goes to 4.4, maybe it goes to 3.8. To be blunt, I don't care. If it's at 3.8, it's because the dollar's at 98 and going lower, and Bitcoin's at 60,000 and going higher, and gold's at 2,200 and going higher. S&P's at 5,000 and going higher. And so that the 10-year treasury bond is now trading as a risk-on asset. And I think that's the most important takeaway as we watch how the 10 years trading over, up until 2022, you can look at the 10-year treasury yield, and when financial conditions tightened, 10-year treasury yields fell. And when financial conditions loosened, 10-year treasury yields rose. And since middle of 22, roughly, those have flipped. And now, when financial conditions tighten, treasury yields go up. And when financial conditions loosen, treasury yields go down at the long end. That is emerging market sovereign bond behavior. That is risk-on behavior. And that makes perfect sense. The United States government has a fiscal problem. So, and this fiscal problem is quite acute. And that's what the bond market is telling us, in my opinion. So I don't have a strong view on the 10-year. I think 5 is the cap. I think we know that. It's probably actually a little lower than that, simply because whatever the level of the dollar is dictates the level of treasury dysfunction, the level of treasury volatility, as indicated by the MOVE index. Every time the MOVE index has hit 130 on the upside, going back 4 years, more dollar liquidity has come in, sometimes from the Fed, sometimes from Yellen running down the TGA. Last fall, it was from Fed jawboning the dollar down, and then Yellen radically shifting versus expectations, issuance from the long end to the short end, and basically using the reverse repo as synthetic QE. But dollar liquidity comes when Treasury volatility gets too high. Now, what's interesting is to hit 130 on the upside, 140 on the move index in September 2022. The Dixie was at almost 115. In September 2023, the Dixie hit 107. Now we start this year, Dixie's at 103, 102.
Yeah.
And we were early last week at 127 on move already.
Wow.
And my guess is, given the action this week in the 10-year, it's probably higher than that. So my interest in the 10-year is more
Dollar related.
I think we've gone from sort of, the worst bond market in 150 years in the last 3 years. I think it's now going to translate to the dollar. They've got to get the dollar down to keep the Treasury market functioning, because they're just not going to let the Treasury market defund the government, in my opinion.
Okay, so I'm thinking maybe we could go to 440. That was a major technical area, and this was 120 bips to the downside. So if we go to 440, that would take us down to about 330, 320, which is a major area of support. Was major resistance for a long time, and here we are, at this 330 level, 340 right here, which is where we could go to. And I think that may coincide with a dollar peak, Luke. I'm looking for about another 100 or so points to the upside in the dollar, around maybe 104.80, 105, and then I think we begin to slide again under 100 next time.
That makes perfect sense with what I just laid out in the Treasury. If the dollar goes to 104 to 105, the 10-year is going to be at 440, I think, in a hurry. And at that point, it's going to be a sloppy equity market while that happens. And then there's going to have to be some more dollar liquidity laid out there from Treasury, from Fed, some combination of the two, under the auspices of getting the Treasury market. And I think the market is increasingly picking up on this, which is why it's 115, 107, 105, so on and so forth. I think that makes a lot of sense. That makes perfect sense to the technicals that you're highlighting.
Okay, so I wanted to ask you about you're bullish gold, you're bullish Bitcoin, and congratulations on that trade. I know it's a long-term trade for you, and we had one of those classic tops on the ETF announcement in Bitcoin. Do you think it's possible we could see 30,000 again in Bitcoin before we launch the next advance? Because I'm looking at this as being a completed wave up here, Luke, and what a wave. I mean, 33,000 from 15 to 49. So just a normal market correction could take it back down to about 32. You're still a believer in this and holding this for the financial narrative that you have working going forward, correct?
I am, yeah. And that's where, in terms of the technicals, I see, what is that, the 50 that it's starting to flirt with there? Is that the 50-day moving average? Yeah.
Yeah, down here there's it's a weekly the weekly 250 intersect around 30 grand. Sometimes it's a magnet.
Gotcha.
So,
yep. It's Bitcoin, right? So the volatility is inhumane. So it's one of those assets
sell?
where.
Do you ever sell?
Oh yeah, I sold most of what I owned in June of 2021 at around 48,000, and to be blunt, I paid off my house. I just felt like it was a little frothy or whatever. I sold most of it. I still had a little bit. I bought it back too early. It's not like I'm
a market timer. You're gonna
right. I started buying it back that fall, and then in the spring of 2022, and kind of through 22, I got really aggressive when there was, it seemed like there was blood in the street with the SBF and the FTX stuff last
Oh,
fall. I
yeah.
got a lot of it in sort of the low 20s, but I do sell.
Okay.
I don't,
Just curious.
yeah. But I am a big believer in it long term, and I'm not selling. I'm not selling here either. I would be, it is what it is. I don't do sort of I don't really swing trade. I could see technically where it could pull back as you know, but I would be a buyer on that weakness. And because what I'm seeing on the fiscal side for the US to me is just, it's the big thing to get right. It's the absolute big thing to get right. And I think Bitcoin is one of the best, highest alpha ways to play that what I'm seeing on the fiscal side, which is increasingly acute.
And would you say that Jerome Powell in December became Arthur Burns and not Paul Volcker anymore?
In short, yes.
Okay.
Question is why. But I don't know if it was. I mean, the data are weakening, but they're not catastrophic. The tax receipts are not catastrophic. I think there's a real chance. I think there's a real chance that what part of what Biden and Xi talked about in San Francisco was the dollar, that there was some sort of San Francisco Accord agreed to, and that
Okay.
part of Powell's pivot was a sit down post San Francisco, where Yellen and Biden said, look, we, the United States, just agreed to weaken the dollar. It's in our interest to weaken the dollar, and you're going to play your role. You need to help us weaken the dollar. Because to me, the data and even Powell fighting Q, or even fighting what Yellen's been trying to do with QT for 6 quarters. So something changed, and I just wonder if it wasn't partly something
Politics?
from that meeting. Yeah, the politics. The U.S. needs a weaker dollar to finance the deficits. Full stop. Like
The
we
world
know
does,
that.
doesn't it? Not just the US,
Absolutely,
the whole
absolutely,
world.
absolutely.
So then that sets a stage for gold. And we had this panic up here. Top was put in Asia. I don't know if it was the Fed again or the banks were caught real short. Maybe they needed help. And to me, I think this is setting up a nice buying opportunity between 1940 and 1900 for us to finally break out and stick. And that probably coincides with the dollar. You still like gold long term here, right, Luke?
I do. Absolutely. I mean, I could see that the technical pullback you're highlighting there makes perfect sense to me between the U.S. fiscal situation and then what we're seeing in
Middle
energy
East?
markets, oil markets. Wall Street
How about,
Journal at the end of December said
yeah,
20% of oil was sold outside the dollar last year.
yeah,
Some portion of that's going
de-dollarization.
to get settled in gold, and because no one
That's
else trusts
interesting.
anybody else's sovereign debt, and nobody else wants to run the deficits to supply the sovereign debt, even if the other parties trusted it. So you've got a bid from oil for gold. You've got a bid from the U.S. fiscal situation, the reserve currency issuer from gold. So secularly, I continue to really like gold.
Are the miners, which have really underperformed gold for many years now, and there are some major cycles that were due for lows here in 2024, and a lot of them are making new lows, even though the physical market is stronger, which it has been for a few years. Any forays into mining issues, or is that just too murky for your subscribers?
No, I've been very bullish on them. I've owned them. I've been wrong. They've done
Okay.
nothing for 4 years,
Yeah.
and it's especially interesting to me given that over that time the gold to oil ratio, right, as a proxy of their profitability, their mining costs, their margins has actually risen. The gold to
Yeah.
oil ratio has trended higher. That should be good for them. So it is somewhat puzzling. The vast majority of my exposure to gold is through gold, and I continue and have said, if you want to own gold, own gold. Don't try to get cute. This cycle is unlike anybody alive has ever lived through for multiple reasons. But the biggest part is that this is the first global sovereign debt crisis in 100+ years. So I think if you want to own gold, you want to own gold. And when I say you want to own gold, you don't want to own paper derivatives. You want to own gold. So it's the miners have been frustrating, shall we say.
Yeah,
I think ultimately they still work, but they've been frustrating.
Because production cost is about 1,200 for most of these miners. So at even where we're at right now, they're printing money. And with oil prices coming down, right, that's a major cost of mining. That should help their bottom line. I think, I'm not saying it's a generational low coming in these miners, but I think that the lows that we set here in the next month or so could be good for a 2-year hold. So for me, that's like getting married. For me to be talking 2 years. All right. It's not dating when it goes out 2 years.
Understood.
Luca, let's just talk geo a little bit here. Things seem to be escalating in the Middle East when you get Iran's Revolutionary Guard firing ballistic missiles. Who wants a war between Iran and the U.S. more, Iran or the U.S.? Is it? It could be a tie. They both.
I don't know. Like, I think they both want it. They both don't want it. I wonder too. If there's a, is answer C like China, right?
Okay.
Or Russia. China, Russia might also be
pushing the agenda.
Pushing it, yeah. That and it's also, OPEC. Like I just said, if the Asian oil market is now thrown off by shipping costs, which are, I think it's mostly just, a demand for tankers, a rate issue, but what's going on through those key shipping zones can't be helping shipping costs all in. It might be a market share issue. OPEC might be in favor of that, broadly speaking, because it seeds the all critical Asian market in oil, which is really the only oil market in the world that's really growing. It's the most important market for sure in terms of both size and growth rate. It seeds it to OPEC. It seeds it to the Middle East. So
that's interesting because, the Arab League came out right away after that missile attack that landed in Iraq and condemned it. So that was almost unanimous condemnation by that part of the world. I don't know if it's a Sunni Shia thing, but Shiite thing, but definitely, and most of those countries in the Arab League are oil producers. So you might be onto something there.
Yeah, and it chips, if you're Russia, if you're China, it also chips away at U.S. credibility on some level, right? I mean, why is the dollar the reserve currency? Well, because we enforce all the trade lanes. Well,
now we don't.
Get busy inflating or get busy or defending the trade lanes or get busy switching the currency. But that's a little bit more of a sort of secondary, sort of tertiary dynamic. I think, I look at that oil market and the flows to Asia and what's happening, and I can't help but think those two things are related.
How about what's happening with the lack of funding for Ukraine? Where does that go? And does that play a role in the financial jigsaw puzzle?
In the short run, no, in my opinion. In the longer run, in the intermediate term, I think the Ukraine may have been a very important revelation for the U.S. Beltway, for Russia, and for China from the standpoint that we were in some certain key areas unable to produce munitions in a sufficient quantity for what was only a proxy war, let alone if we were to go to an industrial war with a major power, we couldn't keep up in some key areas. And I think that raised some huge alarms in the Beltway. So I think in the short run, I think Zelensky's going under the bus. I think, there's either going to be some sort of peace but where we're doing that sort of awkward thing we do where we ghost him. He's texting us for more money and we're ghosting him, not replying.
Hero
And I
to
think
zero in a year.
well, right. And
It
the reason
happens
that
faster in this business as a trader.
Look,
But
if he was winning, if we were winning the proxy war against Russia, he'd still be a hero. Like all you need to know is how, the US media is kind of doing the Homer Simpson backing into the bushes meme with Ukraine to know who's winning there. It's Russia, and they're winning because their industrial production allowed them to win, supported by China. And so that I think leads to, I think there'll be greater impetus to spend more money on domestic production.
Okay.
Aside of an election year, but that's where I think it plays out in the longer term. But in the short run, I think we're doing the quiet backing away thing like we did with the Kurds and like we did with the South Vietnamese and like we did with the Taliban that it's sort of that fade in, I think we're just backing away
well,
from
I would think that our adversaries feel delighted and emboldened. And are you worried about the way China's imploding? F.A.C.E, new lows, took out the lows from, a couple years ago. I think more dangerous, Xi, is when they're under pressure and having problems than if they were prosperous right now.
So I was looking at that yesterday, and I don't want to make too much of 5-minute macro, but it was very interesting to me. You've got the Chinese stock indices breaking down across the board, like you just noted. Commercial real estate there is obviously problematic, but in particular the stock market, and it was getting just pounded in our face yesterday. What's happening with Chinese stocks, and two really counterintuitive things happened. Number one, 10-year U.S. Treasury yield rose sharply. That is not how the 10-year traded in 2015 and 2016 when China was having troubles. But number two,
would have been a flight to quality then.
Would have been a flight to quality, and it was sold. Number one. Number two, Chinese junk bonds are apparently at their tightest spread since 2007. So in this crash in China, or incipient crash in Chinese stocks, 10-year treasuries are sold and Chinese junk bonds are bid. None of those fit the picture. And other than, okay, stocks are going down, but it's not the disaster that is being painted in the stock chart per se, because junk bonds should be blown, but a spread should be blown out in China. And who knows? Maybe that's sort of their home team, saving that. I don't know. But that with the 10-year selling off is a very incongruous picture. Very incongruous picture.
I was thinking about what would be the most contrarian trade in the world, and it would be shorting Japan and buying China. What do you think of that?
China, yes. The China, the Alibaba I see up there, the Chinese internets. Yeah, that I like the long side of that trade.
Yeah.
You
have a hard time wanting to be short the Nikkei?
I do because I think that they will continue to repatriate through the year. They've got some weapons, some credible weapons. Anytime they want to, make the yen go up, they can make the yen go up. So I don't like that one on the funding side. I would rather fund it with, 10-year treasuries, to be honest, than or the dollar. I would rather short the dollar, buy the Chinese internets as the most contrarian trade rather than shorting Japan.
All right. So Luke Roman, my takeaway is the dollar will be a sacrificial lamb to keep our economy going, keep some bid in the bond market, and an attempt to keep the incumbent in, and stick with your long gold and Bitcoin. And if you have another rally in bonds and you're underwater, get out.
I think that's a fair summation.
All right, Luke, always great. I want to thank you for all the years that you've been coming here and contributing, and educating, edifying our community here in F.A.C.E. And I hope that 2024 is your best year ever in all ways.
Well, thank you. I really appreciate that. I've always enjoyed coming on and as an early supporter of FFTT, very, very eternally grateful. So thanks again for having me on.
So follow Luke on X at Luke Roman and check out his letter From the Forest to the Trees. And you got a taste, just a taste of what Luke thinks, and in probably the most critical time period in financial history of our country coming up here in 2024. You need watchmen to help you avoid stepping on landmines. And Luke does that. Thank you, Luke.
All right. Thanks, Dale.
All
Have
right,
a great day.
Luke Roman, everybody. Hope you enjoyed it. I know I had fun. And you can join the team in about 10 minutes on the Morning Edge, and we'll see everyone to wrap the week tomorrow. Don't just count your pips, count your blessings. Thanks again, Luke. See you soon.
Thank you very much, Dale. Take care, my friend.